Hi, Tom here, and today we're going to talk about beneficial ownership information reporting or BOI reporting. As I record this, it is November of 2024, and a very important deadline is fast approaching, and that deadline is January 1st of 2025. Most small businesses in the United States will have to have reported their beneficial ownership information by that date, January 1st of 2025. And even if you're watching this after that date, any new business that is formed starting actually January 1st of 2024 has to report this information within 30 days of being formed. So what are we talking about here? Well, most small business owners are going to have to file with FinCEN. That's the Financial Crimes Enforcement Network. This is a government agency. It is the same agency that administers the FBAR program, if you're familiar with that. That's the Foreign Bank Account Reporting System. But the purpose of this BOI reporting is to make it hard for bad actors, people who are committing fraud, to hide behind corporate or LLC type of shell companies so that when the authorities go to look for who is it that's committing these crimes, these frauds, they can find the actual human being behind the entity. So they're going to make all the people who own these entities report their personal information so they'll know where to find them if they need to. This was authorized by the Corporate Transparency Act, and it was effective actually January 1st of this year, January 1st of 2024. But what they did is they made the deadline for existing businesses, in other words, for businesses that already existed before January 1st of 2024, the deadline for reporting is January 1st of 2025. But new businesses that were formed on or after January 1st of 2024 and into the future, 2025, 2026, etc., they have to report this information within 30 days of formation. And this applies to any entity created under state law, such as a corporation or an LLC or a limited liability partnership or a limited partnership. Any of those that are not exempt have to comply with these filing requirements. Now, there is an important exception. This only applies to businesses that have applied for some sort of entity with their state's Secretary of State office. So it does not apply, for example, to sole proprietorships. If you have a small business, you have not gone to the state and gotten an LLC or a corporation or anything like that, and you're just operating your business by yourself without that type of entity, you do not have to worry about this. You do not have to report this. Similarly, with a partnership, if you and somebody else, or it could be 3 or 4 people, it doesn't matter how many partners, but if you have a partnership and you have not gone and gotten an LLC or an LLP or any of these type of entities, then this does not apply to you either. You do not have to worry about it. Now, don't confuse that with just filing your taxes as a sole proprietor or as a partnership. So you could have an LLC, for instance, a limited liability company, and still file your taxes as a sole proprietorship. But that doesn't matter. What matters is the fact that you have an LLC. The fact that you have that LLC means that you are subject to these BOI reporting requirements. And the same with a partnership. You could have an LLC or an LLP and file your taxes as a partnership, but you are still subject to these requirements because you have that state law entity. And then the last point you can see on the slide here is that this also applies to what they call equivalent foreign entities that are registered to do business in any state with the Secretary of State's office. Now, there are exemptions, so you have to file this unless you are exempt. This is a list of the exemptions. This list, this chart, comes from a FinCEN document, a guide that we have linked to in the description of this video, and I'll show you later how to navigate your way to the guide. And so the guide is very long. This is just one page from it. And this shows you the short title of the different exemptions. And then this guide goes in and gives you details for each of these. So you can look at this and see if you think you might be exempt, and then you can get that guide and you can go and try to get more information. We are going to look at just a few of these in more depth because they're the ones that I think my viewers might be interested in. So, for instance, accounting firm. If you've looked at this list and you said, oh, I'm an accountant, I'm a bookkeeper, does that mean I don't have to register? Well, unfortunately, spoiler alert here, you probably do. This is only for very large accounting firms. And then other ones, tax exempt entities. This is good news. If you have a tax exempt entity, then most likely you are exempt from this reporting and you do not have to worry about it. We'll talk about that a little bit more in depth. A large operating company. So this BOI reporting is designed for small businesses. So, what is considered a large business? We'll get into that. That's a large operating company. And then the last one that we will look at in particular is this inactive entity. So, if you've got an entity that's old, but you never actually dissolved it, but you're not doing anything with it, you may qualify to not have to do this BOI reporting. And then, of course, you can see all the other ones that are listed here. And again, there are more specifics in that guide that we will talk about. So these are the ones we're going to look at: accounting firm, tax exempt entity, large operating company, and inactive entity. So for the accounting firm exception, it's a very narrow exception. You must be a public accounting firm. That's not so hard. But also, you must be registered in accordance with Section 102 of the Sarbanes-Oxley Act. And that is for firms that audit public companies. So if you're a typical small accountant or bookkeeper, you're not auditing anybody, much less public companies. So this exception only applies to those larger firms. Next, though, is tax exempt entities. If you are an organization described in Section 501C of the Internal Revenue Code, then you are exempt not only from taxes, but from having to file this BOI report. Now, you're probably all familiar with 501c3 organization. You've heard of that. But under 501c, there's actually a lot. I think there's more than 20 of these types of organizations that are exempt from tax. And if you are on that list, you don't have to worry about this reporting. Also, any political organization, as defined in Section 527E1, don't have to report. And then there are certain types of trusts, charitable trusts, and split interest trusts that do not have to do this BOI reporting either because they are considered tax exempt entities. Next is large operating company. In order to be considered a large operating company and therefore to be exempt from this BOI reporting, you have to meet all of these requirements. And there's actually some more specifics in that guide, but this is the gist of it. You have to have more than 20 full-time employees in the United States. You have to have a physical location in the United States, and you have to have at least $5 million in sales from U.S. sources. So if you have all of that, more than 20 employees in the United States, and at least $5 million in sales from U.S. sources in the United States that you've reported on some sort of tax return, then you are a large operating company and you do not have to worry about these BOI reporting requirements. And then the last one is inactive entity. So this is basically if you've got an old entity that you're not doing anything with, it doesn't have any assets, then you don't have to worry about the reporting. So more specifically, you had to have an entity that was in existence before January 1st of 2020. It's not engaged in any type of active business. It's not owned by a foreign person, either directly or indirectly, in whole or in part. It has not experienced an ownership change in the last 12 months, has not sent or received any funds, directly or indirectly, in an amount greater than $1,000 in the last 12 months, and does not otherwise hold any assets, including ownership in any other entity. So you've got no assets, you don't own any other entities, you haven't engaged in any transactions more than $1,000 in the last 12 months, you're not engaged in any type of business, and you've existed since before 2020, then you qualify for this inactive entity exemption and you don't have to worry about the BOI reporting requirements. So what if you do have to worry about it? You don't meet any of those exceptions or exemptions. What does that mean? Well, you must report to FinCEN the identity of the company And for each beneficial owner of the company, their name, birth date, address, their unique identifying number, which is just a driver's license number or a passport number, and then a copy of their driver's license or passport. And a beneficial owner is anyone who, directly or indirectly, exercises substantial control over the entity or owns 25% or more of the entity. So if you own 25% or more of the entity, you automatically have to report. And even if you don't own 25% or more of the entity, you may not be an owner at all, but if you exercise substantial control over the entity, then you would be subject to this. We're going to talk a little bit more about that on the next slide, but mostly what you want to do is go look at that guide that I talked about from FinCEN because they go into much more detail about this. If this applies to you, then you will report electronically through FinCEN's website. You can't do this on paper. You have to do it online through FinCEN's website. It's at fincen.gov/BOI. And again, we'll show you what that looks like a little bit later. There is no fee for this. So if you're Googling around and you're seeing somebody that wants to charge money for filing this, that is a scam. And those scams are out there. This is completely free to file. So just skip all the Googling, go straight to fincen.gov and look for this so that you do not get scammed. Now, if you've got a lawyer or an accountant or somebody like that that you trust and you want them to take care of it for you and you're going to pay them to do that, that's fine. That's not what I'm talking about. What I'm saying is if you're just out there randomly on a search engine looking for this and you come across somebody that you never heard of that wants to charge you money, they may even have an official looking website that looks like it's the real thing and that it's a government site. It's not. If they're charging you money, it's not. It's a scam. So go to fincen.gov and do it yourself. This, by the way, is not an annual report. So you have to do it this first time. If your entity existed before 2024, then you have to file this first report by January 1st of 2025. And then you do not have to do it every year after that. If you have a new entity that started January 1st of 2024 or later, then you have to do this report within 30 days of forming that entity. And then that's it unless you have changes. So it is not an annual report, but you do have to report if you have changes. So if your ownership changes, you have to report it. If your name or address changes, then you have to report that. But it's not something that you have to report on any type of regular basis. If you willfully failure to file this, you are subject to fines of up to $500 per day, up to a maximum of $10,000, and or up to 2 years in prison. Now, this is for willful failure to file. If you're watching this and you're freaking out because you formed a new business, let's say in January or later of 2024, and you did not file this within 30 days of reporting. Or maybe you're watching this after January 1st of 2025, and you're like, I didn't know about this. I didn't file it. You, the innocent business owner who just didn't know about it, they're not after you. So don't worry about these fines and imprisonment and all of that. Just go and get it taken care of as soon as you can. FinCEN wants people to comply. They don't want to fine people. They don't want to put people in jail. They want people to comply and do this. So just go and get it done. You only have to worry about this fine and imprisonment if you're one of those people that's like, oh, I know I'm supposed to do it, but I'm not going to give them that information. I'm not going to do it. Well, then they might come after you. So you want to, you do you. But in my opinion, you should just go ahead and get this done. It really is not a big deal, and it really is pretty simple to do. So let's talk a little bit more about the beneficial owner definition. First of all, there can be more than one, right? If you've got at least 25% ownership, obviously there's more than one owner. So if you've got more than one person that each owns 25% or more, then they are all going to have to report. In addition, you may not actually have to be an owner or a 25% owner in order to report. You could be a senior officer. You could have the ability to appoint or remove senior officers. You could be an important decision maker or have any other form of substantial control. And again, look at the guide. It gives many more details about what all of these things mean. And if you're still not sure, then you should probably talk to an attorney who is familiar with this so they can give you an opinion on whether or not you need to file. Now, there must be at least one person who files. So every entity out there is owned and or operated by at least one person. So you have to have at least one. And then you could have more if you have people who meet these other requirements. Sometimes minor children are actually the owners of business or the partial owners of businesses, and minor children are exempt from reporting. So you do not have to put the minor child's information into the FinCEN program. However, that doesn't mean that you're off the hook. The parent or guardian of that minor child has to report. So the parent will put the parent's information into the system, not the child's information. So that is how that works for minor children. This is what the FinCEN website looks like. If you can see this here at the top, it is fincen.gov/BOI. And when you get here, when you actually go to file, you can see this section here, you will click there. If you want that guide that I was telling you about that's linked in the description to this video, you will click here on this small business resources. And when you do that, then this page will come up and you will see here this small entity compliance guide. And you can click on that and you can get all the details. Also, they have an extensive FAQ. So if you've got a question, it's likely that that question is answered here. So you can go to that. I have a single member LLC. I did this reporting and it really was very simple. You just go in, you put in your company's name and address information, you put in your personal name, address, date of birth, etc. The hardest part is you have to give them a copy of your driver's license or your passport. So I already had one, as it turns out. I had a PDF copy, so I was able to just upload it and send it to them. I hit submit. A couple hours later, I had an email back from them saying, yep, you're all good. You are registered. Now, obviously, the more complicated your reporting structure, so if you've got several owners or other beneficial owners who have to comply with this, then you're going to have more people to input. So it's going to take you a little bit longer, but it really is pretty straightforward and pretty easy to do. So if you have questions, go ahead and leave them in the comments. Of course, I can't give you any type of specific legal or accounting advice for your particular circumstances, but if you have general questions, I will be glad to answer those. If you have more specific questions, then go look at that guide. And if you're really not sure after looking at the guide, then you'll want to consult an attorney to get a good answer for that. So thanks for watching, and I will see you on the next one.